Chapter 1: The Illusion of Success. On a bustling afternoon on Madison Avenue in New York, 8th September 2015, something strange was happening. The sidewalks were packed, not because of a Hollywood premiere or a political event. Photographers, paparazzi, and reporters were all clustered outside a glittering new store, pointing their lenses at celebrities like Naomi Watts and Donald Trump Jr. They weren't there for movie stars. They were there for a jeweler from India who had just opened his first luxury boutique in the United States. His name was Nirav Modi. That moment marked a milestone, the arrival of the first Indian to break into the elite world of ultra-luxury diamond jewelry. Surrounded by flashing cameras and high society, Modi basked in the success of what looked like the ultimate entrepreneurial dream. He wasn't just selling diamonds, he was selling aspiration, exclusivity, elegance, a lifestyle. But what no one at that event knew, what no magazine cover hinted at, was that just 3 years later, the same man would vanish, fleeing his country under the weight of what would become India's biggest banking fraud. The same name that once stood for ambition and artistry would soon become synonymous with deception, manipulation, and a scam that shook the very foundations of India's banking system. Chapter 2: Origins in Antwerp. To understand how this happened, it's important to rewind the story back to its origins, back to a wealthy family in Belgium. Nirav Modi was born into a Jain family settled in Antwerp, a city long considered the world's diamond capital. His father was in the diamond trade and ran a thriving business. So diamonds weren't just around, they were a way of life. But Nirav wasn't content being a part of the family business in Europe. At 19, he made a decision that surprised many. He left Belgium and moved to India. While most would think that staying in Europe, at the heart of the diamond world, was a smarter move, Nirav had different plans. He wanted to learn the trade from the ground up, and he had an entry point. Chapter 3: Learning under Mehul Choksi. That entry point was his uncle, Mehul Choksi, who ran Gitanjali Gems in Mumbai, a massive diamond business that was already well established in India. Choksi wasn't just an industry veteran, he was a big player with decades of experience and networks that ran deep across India's tightly knit diamond community. For Nirav, this was the perfect launchpad. The diamond industry in India isn't exactly welcoming to outsiders. It's a traditional, tight-lipped ecosystem where trust takes years to earn. But through Choksi, Modi was able to gain access, respect, and an education in how the industry really worked, not just in the showrooms, but behind closed doors. For nearly a decade, Nirav worked in the background. He learned the language of diamonds, not just their cuts and carats, but their pricing strategies, trade routes, and client relationships. But he also realized something critical during those years. The real power in the industry didn't lie with wholesalers or traders. It was with the luxury brands, Cartier, Tiffany, Bulgari. These were the names people lined up for. These were the brands turning ordinary stones into multi-million-dollar masterpieces. Chapter 4: Building Firestar Diamond. Modi didn't want to be another trader. He didn't want to build a business that moved boxes of diamonds. He wanted something grander, a global name. He wanted to build a brand that would stand shoulder to shoulder with the world's most elite jewelers. So in 1999, he left his uncle's business and launched his own company, Firestar Diamond. At first, Firestar focused on what Modi already knew, trading diamonds in bulk, and it worked. He was successful, profitable, and growing. But that itch remained. Trading wasn't glamorous, it wasn't iconic. It didn't give him the legacy he craved. That's when the idea of creating his own luxury brand started to take shape. Chapter 5: The Birth of a Luxury Brand. By 2010, Nirav Modi launched his own namesake brand, something no Indian jeweler had done at that level before. Even though India cuts and polishes around 90% of the world's diamonds, those stones are almost always sold under foreign luxury brands. No Indian name had cracked that ceiling. Modi wanted to be the first. He immersed himself in the luxury fashion capitals of the world: London, Hong Kong, New York. He studied how luxury was sold, how it was packaged, and most importantly, how it was marketed. The key insight: luxury wasn't about the product, It was about the story, the exclusivity, the experience. People weren't buying diamonds, they were buying belonging, a seat at the table of wealth and power. So Modi went all in. He hired top international designers, introduced patented diamond cuts, and created statement pieces like the Golconda necklace that sold for over $3 million, a record for an Indian jeweler. He wasn't just making jewelry anymore, he was creating art, or at least that's how it was positioned. And that raised a critical question. Where was all the money coming from? Chapter 6, The Letter of Undertaking. What looked like unstoppable ambition on the surface was actually hiding something far more dangerous. Behind the glass facades and red carpets was a financial black hole, one being filled using the most sophisticated banking scam India had ever seen. And it all began in 2011 with a single letter. That letter, the Letter of Undertaking, or LOU, became the heart of a fraud so massive it sent shockwaves through India's entire banking industry. In early 2011, Nirav Modi approached the Brady House branch of Punjab National Bank in Mumbai. The reason? He wanted to import diamonds and needed short-term credit. Now that's pretty standard for businesses in the import-export trade. To help with this, Indian banks issue something called an LOU, a guarantee sent to a foreign bank saying, "You can lend money to this customer, and if they don't repay, we will." It's essentially a loan guarantee. But there's a catch. Banks only issue LOUs if the borrower gives them collateral. That could be cash, real estate, stocks, anything that protects the bank in case of default. It's a basic risk protection measure, but Nirav Modi wasn't interested in following the basic rules. Chapter 7, The Swift Loophole. Instead, he allegedly bribed key insiders within the PNB branch. The most important among them, Gokulnath Shetty, the deputy manager, and Manoj Karat, another bank official. These two didn't just bend the rules, they broke them in ways no one saw coming. Here's how it worked. Normally, when an LOU is issued, it's recorded in the bank's core software system, CBS, which is connected to SWIFT, the global messaging network used for international banking transactions. This ensures transparency. Any manager or auditor can look at the records and see exactly how much exposure the bank has. But in this case, Shetty and Karat bypassed the CBS system completely. They used the SWIFT terminals to issue LOUs, but didn't record them in PNB's internal software. As a result, the bank's books didn't reflect these guarantees. They were invisible. It was like a secret tunnel through which thousands of crores were vanishing. And once Modi realized this loophole was working, he went all in. Chapter 8, The Web of Shell Companies. He began requesting LOUs regularly, not just for one or two companies, but through a vast web of shell companies. Over 30 companies were created across Hong Kong, the UAE, and other financial havens. Most of these companies had dummy directors. On paper, they looked different. In reality, they were all controlled by Nirav Modi and Mehul Choksi. These companies would create fake invoices, fake purchases of diamonds, often of extremely poor quality or no actual product at all. Company A would sell a stone to Company B for 10 lakh rupees, which would sell it to Company C for 50 lakh rupees, and the cycle would continue until the diamond was worth over 1 crore rupees on paper. Then an LOU was requested to pay for that imaginary diamond. And the money kept flowing. Between 2011 and 2017, PNB issued 1,212 fraudulent LOUs linked to Modi's firms, amounting to 13,850 crore rupees, nearly $2 billion. And the terrifying part? No one noticed. Not the auditors, not the RBI, not even other departments within the bank. Because the LOUs were never entered into the official system, there was no trace of them. It was like watching money vanish through a wormhole, and it happened again and again for years. Chapter 9, The Machine Keeps Running. The scam was running like a well-oiled machine. Modi had created a network of fake companies across countries, conducted fake transactions between them, and used those paper trails to justify LOUs. The foreign banks released the funds, thinking PNB would cover them if something went wrong. But PNB didn't even know these LOUs existed. Back at home, Modi's empire looked untouchable. He was expanding aggressively, opening stores in every expensive city imaginable. From Hong Kong to London, from Macau to New York, his boutique stood shoulder to shoulder with Tiffany and Cartier. Every new opening came with a media blitz, celebrity endorsements, and polished marketing campaigns. But the sales numbers didn't support the flash. Many stores were deeply unprofitable. Still, the illusion was powerful enough to keep everyone fooled, including the banks. Until one day, it wasn't. Chapter 10: The Unraveling. In 2017, Gokul Shetty, the key PNB official helping execute the scam, retired. When Modi's team walked in to request another LOU in January 2018, the new bank official asked them to deposit full collateral. Modi's team casually replied that this was never required before. That raised an eyebrow. Then two. Then the bank started checking its records, and what they found made jaws drop. None of the previous LOUs Nirav Modi used were logged in Punjab National Bank's internal system, but the SWIFT messages, the ones that actually moved the money, did exist. That meant PNB had unknowingly guaranteed thousands of crores in overseas loans. What started as a 280 crore rupee suspicion quickly snowballed. 800 crore rupees, then 2,000 crore rupees, until the final number landed at a staggering 13,850 crore rupees. It wasn't just a fraud, it was India's biggest banking scandal. Chapter 11: The Great Escape. The authorities moved fast. The CBI filed FIRs, the Enforcement Directorate launched investigations, and tax officials raided Modi's offices and showrooms across India. Properties were seized, accounts were frozen, but Nirav Modi, already gone. Using a revoked or fake passport, he had slipped out of India just before the crackdown began. His location remained a mystery for months. That changed when a UK journalist spotted him walking the streets of London, calm, well-dressed, and living in a 75 crore rupee luxury penthouse. Outrage erupted. While thousands of employees were left jobless back in India, Modi continued his lavish lifestyle abroad. Soon after, Scotland Yard arrested him in March 2019. But extradition wouldn't be easy. He fought back, claiming he wouldn't get a fair trial in India and that prison conditions would violate his rights. The legal battle stretched for years. In 2022, the UK court finally approved his extradition, but Modi filed confidential appeals, delaying the process again. Back home, the damage was lasting. The RBI banned low use, trust in the banking system was shaken, and the 13,850 crore loss remains mostly unrecovered. Chapter 12: The Anatomy of a System Failure. And Nirav Modi, he knew exactly how to exploit that. He built an empire not just on diamonds, but on the illusion of credibility, on photo ops, red carpets, luxury ads, and celebrity endorsements. That illusion worked for years, until one new employee at a PNB branch said, "This doesn't look right." It took just one question to unravel everything. Looking back, the Nirav Modi scandal wasn't just about luxury and loot. It was a masterclass in how unchecked ambition, systemic loopholes, and misplaced trust can combine to create the perfect storm. At the heart of the scam was one bank branch, one loophole, and two corrupt employees. And yet, the fallout was so massive, it brought down the credibility of an entire national bank. That's the kind of scale this fraud operated on. What should have been flagged in routine audits went unnoticed for 7 whole years. Not because it was perfectly hidden, but because no one was really looking. 18 different auditors walked in and out of PNB between 2011 and 2017. Some from private firms, others from government agencies. And not one of them blew the whistle. That tells a bigger story of overworked systems, undertrained staff, outdated software, and a culture where box-ticking replaced real vigilance. The Reserve Bank of India, too, stayed largely silent for most of that period. Despite being the apex body meant to supervise and regulate the entire banking sector, it failed to catch what was unfolding right under its nose. The lack of SWIFT TCBS integration was a glaring vulnerability, one that Nirav Modi didn't create, but certainly weaponized. What about the foreign banks that lent billions purely on low use? without ever questioning how one man could repeatedly guarantee such massive repayments. That blind trust wasn't just oversight, it was a sign of how reputation had replaced due diligence. Nirav Modi mastered the art of illusion. Lavish boutiques, celebrity endorsements, front-row appearances, all designed to project credibility. And it worked, until it didn't. By the time the system caught on, the damage was irreversible. Jobs were lost, trust was broken, and India's banking safeguards were exposed. Even now, Modi delays extradition through confidential appeals. Whether justice is served or not, the scam remains a brutal reminder of how ambition, unchecked, can collapse institutions and ruin lives. Thanks for watching. If this story gave a deeper insight into how one of India's biggest scams unfolded, make sure to like the video, share it with others, and subscribe to the channel for more powerful true stories that deserve to be told. See you in the next one.